you good to go? Perfect. Thank you very much, and good evening, everyone, and welcome to our council meeting of May 26, 2026. I'd like to call this meeting to order. Mr. Clerk.
Moved by Councillor McDonald, seconded by Deputy Mayor Densham. Be it resolved that this regular meeting now open at 6 p.m.
All in favor? Motion's carried. Moving on to opening remarks. Any opening remarks from member of council? I'll go to Deputy Mayor Densham.
Thank you, Mr. Mayor. Yeah, I just wanted to congratulate our CAO and our EDO. I feel like we've really turned a corner in terms of how we as a municipality are promoting ourselves as a municipality and as businesses. When I take a look on social media, it's very apparent that we're doing a really good job notifying people about the operations of the municipality and notifying people about new business activity that's going on. And to me, it's very, very positive. I see a lot of likes on that. So I just wanted to take a moment to congratulate our CAO and our EDO for injecting new life into our economic wellness and our communication. And I look forward to seeing this deepening as we dig into some of the bigger projects and some of the unique features of our municipality and our larger corporate partners in the area. So congratulations and thank you.
Thank you. Any other opening remarks? Seeing none, moving on to the adoption of our agenda. Mr. Clerk.
Moved by Deputy Mayor Densham, seconded by Councillor McDonald. Be it resolved that the agenda be approved as presented.
Thank you. Any comments or questions in regard of the agenda? Seeing none, all in favor? Motion is carried. Is there any disclosure of pecuniary interest and nature thereof? Seeing none, we will move on to our delegation, and I'd like to welcome, did I miss something? Which will be after the delegation for the. So moving on to our delegation, I'd like to welcome Christina Morgan from Welsh LLP that will come in and discuss our financial audit. Welcome, Christina.
Perfect. Thank you very much for having me. So yes, I'm Christina Morgan, Welch LLP. I've been with Welch now for 14 years, and I've been part of this audit, started as a manager, and now I'm the partner on the audit. So we've done a little bit of rotation, which is good to keep the independence. So I'm happy to be back here again this year as partner. So we're going to go over the financial statements for the fiscal year ended December 31st, 2025. I know that all of you have had a chance to go over the financial statements, so I'm going to go over the high-level items on the financial statements, and if you do have any questions, then we can definitely bring those up at the end. So we're going to go over an overview. So the audit scope and responsibility. We'll move on to so this is the agenda. So the audit scope and responsibility. So what we audited. People kind of ask, what do you do whenever you look at these financial statements? So we audited the financial statements for the fiscal year ended December 31st, 2025. They were prepared under PSAS, which is the Public Sector Accounting Standards. And we do have a qualified audit report again this year, and that is because there's a departure from PS 3280 asset retirement obligations. So this is one that all municipalities are facing, and slowly, one by one, everybody seems to be slowly coming on board with adopting this new asset retirement obligation. It's one that it's a qualification we've had now in the statements for 2 years, and one that we continue to check in with finance and look to see whether or not there's budget to meet this asset retirement obligation. So for 2025, we have qualified the statements again, but it's only for this one departure. So in our opinion, the financial statements do reflect the fiscal year ended. It's a clean opinion other than that one departure. So the key responsibilities, management, so yourselves in finance, are responsible for the preparation and fair presentation of the financial information. So you have a team that supplies us with all the financial information that we need, and that is their responsibility in order to give us everything that we need for the audit. Auditor, our responsibility is to express an opinion based on that audit evidence, which we were able to do. Council, your responsibility is your oversight for this financial reporting and approving the financial statements. So we're going to go over the highlights of the financial statements, but just so you know, it does include the statement of financial position, statement of operations and accumulated surplus, statement of changes in net debt, statement of cash flows, and your disclosures and notes to the financial statements, which I know are very exciting, everybody's favorite topic. So we'll move on to the next slide, which is your highlights. So I know that these financial statements can be quite daunting, so I wanted to bring out the highlights to really indicate how well you did over the year. So accumulated surplus of $43.2 million, up $1.8 million from 2024. So you have to remember, whenever you're looking at accumulated surplus, you have a lot of capital assets that you purchased during the year. You also receive a lot of capital funding for those assets. Under other accounting standards, that funding would offset the asset costs. However, under PSAS, you show the capital asset as an asset addition, and you actually show the funding as revenue, which is why it looks like this big surplus, but really it's because the expense is sitting on the balance sheet side. So accumulated surplus is up $1.8 million from last year. Financial assets, $10.5 million, those are going up again. Some of the things that went up during the year, your cash position is very healthy. Taxes receivable and accounts receivable have gone up. The taxes receivable, that going up is actually a direct impact of the development that you have in the area. As we get on to some of these highlights, you'll see that the collections on your taxes receivable 2 and 3 years has actually improved significantly, and your increase in taxes receivable is all the current year. So it just goes to show it's your expansion in North Stormont and why you've got a heavier tax-based receivable. Net financial assets, $1.7 million. So this means you have more assets than you do current liabilities, which is a great position to be in. A lot of townships and municipalities, you see themselves actually in a net debt situation where their payables and their liabilities are a lot higher than their assets. So you're in a really good, strong financial position, which is exactly what you want in a year like now where you're building the lagoon and you're expanding in your communities. Tangible capital assets, $40.4 million. Again, you're investing in your community, and that also includes $802,000 of work in progress, which is the lagoon. Long-term debt is up $4.8 million. Again, it's a reflection of how you're investing in your community. You know, you've got the loan as well for the purchase of this building, your renovations, the roads, the lagoon, all of that. And reserves is up, is at $5 million, which is up $302,000, which comes from $302,000 from operating surplus. You also had a really great surplus in water and sewer, which gets put back into reserve for future water and sewer expansions, and your building permits as well, which goes into your building reserve. So really healthy financial position at the end of the year. So overview of revenue and expenses. I wanted to show it this way so you could see your revenues and expenses as whenever you're looking at taxation versus government transfers, user charges, and others. You'll notice that your biggest spike from 2024 is your user charges. That's a direct reflection of your water and sewer charges. That is where you had the biggest increase since 2024. Whenever we're looking at expenses by function, the biggest thing that stands out here, transportation is always going to be one of your biggest ones, right? And that's roads. And let's be honest, that's where everybody wants you to be putting in the money anyway, and they want you to be spending the money on roads, all of those repairs. So that's where we're seeing the most spending. It's up total. Transportation is about 34% of your expenses by function over the year. But again, was pretty much online with budget and comparable to the previous years. So looking at it this way in a chart format, you'll see that we've got some trends, but there's nothing that really completely stands out. And whenever we look at it in comparison to the budget, it's pretty reasonable. So overall, there was an annual surplus of $1.8 million. And again, that's bringing in that capital funding that you received. Specifically, you did receive some money that you used during the year for that lagoon expansion. So that funding is sitting as part of that annual surplus. So move on to the next slide, which is your long-term debt. So as I did mention, you did have an increase of debt during the year, but you also had a couple things that were paid off. So you did have one debenture that was paid off during the year, and you took on some new loans. So we're looking at an increase because of the building loan and some of your water and sewer, and we had some transportation. So overall, long-term debt did have an increase, about 20 new borrowing of $1.3 million, and your debt increase is 27%, but you're well within your debt servicing. So whenever we're preparing your FIR, we actually have to do a calculation and look at your debt servicing ratios, and you're well within your ratios. It's a very healthy balance. There's nothing alarming there. You're borrowing at the same rate as you're bringing in revenue and purchasing capital assets. So it's all very reasonable. So we'll take a look at reserves and reserve fund balances. So I wanted to show you how reserves are looking when you're looking at a whole. We had a really big increase to your reserve fund for water and sewer because of that large revenue base during the year. So that's where a lot of your reserve is sitting right now. The other one is working capital, 33% of your reserves. And the other one that sticks out is your overall just capital reserve, about 12% of that overall. So it's a good, healthy reserve composition, noting that you're putting a lot of money aside in reserve for your future water and sewer, which is great, especially with your lagoon expansion right now. So we'll move on to the next slide, which is your significant changes. So capital investment, overall about $3.9 million in capital investment. Your major spending was in transportation, which was $1.86 million. Water and sewer, $786,000, and you did have that one new debenture. If we look at your Ontario transfers, there was a decrease in that funding, but that's simply because you had an ICIP funded project that completed during the year. So there was a lot of revenue that came from that in 2024, and you didn't have any Trillium funding in 2025. That was all in 2024. Another reason for that is you do have the lagoon expansion, as I mentioned a few times now, and you had a large amount receivable at the end of the year, but it's all deferred because you have to match the receivable with the spending. It's because a lot of that spending occurred at the beginning of 2026. It's sitting in deferred revenue. So you should see a large increase next year in those Ontario transfers as you continue to spend on that lagoon. Transportation, as I mentioned, that's your largest expense, which is 34% of all expenses. And just noting that it does include $773,000 of amortization on road infrastructures, which again is just highlighting the continued spending that you're doing on your roads. We've got a really large amortization expense there. Water and sewer, great surplus, $1.1 million, put back into reserves for your future spending, continue to improve those services for your communities. So surplus increase of 21% was driven directly from the water and sewer and those user charges. Just one thing to note, the OMERS deficit, so as you, in the notes of the financial statements, each year we've indicated, okay, you pay into OMERS and everybody has their OMERS pension. However, on the OMERS end, there's actually been a deficit for years and years and years now. But on the plus side, it has been improving each year. So each year in your financial statements, we do put a note that shows the deficit under OMERS and how it has increased or decreased from the previous years. And it has actually improved in financial health from 2024. So which is good. We want to continue to see OMERS pulling up their socks and getting rid of that deficit. So good news there that it has decreased their deficit once again. And property taxes, overall increase in revenue of about 6%. But the biggest thing here is you've got a decrease in your accounts that are in 2 and 3 years arrears, about 34%. So you're doing really, really well in your collections, and you've got an increase in your current tax base, which is great. So we'll move on to the last part, which is our audit observations. So overall, whenever we look at our audit opinion, there was only the one qualification, same as prior year. That's at ARO departure. All other areas present fairly. We checked all your arithmetic, and across the statements, we did 107 tests, tested well. Annual operating surplus, $243,000. So whenever we're looking at just the surplus as a reflection of your operating expenditures and operating revenues, it's about $243,000, which if you're looking at that, it's about 2.4% of revenues. That's a balanced budget. And that's what you want to see. That overall surplus comes from that capital funding that you've used for your capital assets. So your overall operating is 243, which is what you want to see. You never want to show an operating deficit, but this goes to show that you budgeted well and you were really close to being right on that budget. Your overall surplus, $1.8 million, is really going to strengthen your financial position. And as we've mentioned a few times, you've got that nice lagoon expansion underway, which is a reflection of your continued development and growth in North Stormont. Some things we to bring to attention. So you did have an increase in long-term debt. So you've got one new debenture for this nice new building. Deferred revenue, this is where I was talking about that increase of deferred revenue, $847,000. And that's because right at the end of the year, you had a receivable for that lagoon funding. However, the spending is in 2026, which is why it's all been deferred. So we're going to see that large increase in capital funding in 2026 because of that. Reserve increase, again, just over 1 million, water and sewer, and you did have some capital gains during the year that did go into that as well, which went into your capital reserve. We did send out legal letters to 4 of the firms that you work with. We've received 3 out of 4, and I expect, I was just talking to Chad, we'll probably get the other one tomorrow. So those are almost all received, and no issues to note. The one thing, as we've harped on a few times now, is that departure from ARO. So that'll be one thing that, we can take a look at, and council may want to review with finance to see whether or not we can take a look at that asset obligation qualification in 2026 and determine whether or not we're going to continue to qualify the statements for that. A couple small things at the bottom. There's always different things that we can throw into the statements or ways to improve statements and just increase transparency. So there's a couple notes that we may want to look at for 2026, which I can discuss with finance, and we can put into the draft statements for 2026. But one note that we are suggesting is potentially PS 2022 for related party transactions, just to increase the transparency. So the related party transactions, just to know whether or not there's any services that the township pays for that any of the councilors may own the business, right, that are a vendor of, or vice versa. So it's just those related party transactions would really increase that transparency. It is a note that you may want to consider putting in, or we put in that there is no related party transactions and just acknowledge that fact. So it would be really nice to put in there just to add the transparency. One thing we could also look at is if there's any contractual rights, and we could look at subsequent event notes. Again, these are just things that we could put in to really enhance the notes of your financial statements and see whether or not those are things that really are applicable for 2026. And again, that ARO disclosure, we may want to look at that in 2026 as well. But these are disclosure improvements only. There's no restatement, there's no material corrections. It's just things we may want to consider to help beef up the notes of your financial statements and increase that transparency for 2026. So I did want to take a chance at this time just to say thank you to finance and your wonderful team for getting us getting everything ready on time. We are on schedule to file the FIR for May 31st, which I love. And I'm very excited to be reviewing that this weekend, actually, and making sure that it's filed by May 31st. So kudos to your team for getting us everything on time and providing us with the information to get the FIR filed on time this year. Did anybody have any questions?
Well, I will look at, I also will probably get our treasurer to say a few words as well, but I'll start with council and see if there's any questions. And I see Councillor McDonald.
Just a compliment. That was interesting.
Thank
I
you.
think that's a huge compliment when it comes to audits. So I was saying I've sat through 4 already this year, and that was you had a lot of interesting facts, and I think it's presented in a way that the public can understand too. So just congrats on that.
Thank you. That's exactly what I was going for. I was trying to liven it up a little bit, so I'm really glad I hit the mark.
Go ahead, Deputy Mayor Densham.
Yeah, I too appreciate the presentation and how you've noted some of the key influencers in there, so that's very much appreciated. On the property tax, and this might be a question for our treasurer rather than yourself, glad to see that it's going in the right direction, that our 2 and 3 years in arrears is dropped by 34%. I know Kim's been working hard at that and obviously accomplishing that. What I'd love to understand is what is the current percentage right now of 2 and 3, if you happen to have that handy? And if you happen to know it, if not, then that's fine. Because again, and this is more for the public's sake, the biggest problem with this is that when we don't collect, we still have to pay the other 2 parties. We have to pay the county and we have to pay the education bill 100%. So that percentage hits us hard. So thank you for the hard work of getting that number down. Let's keep working at it. But from my perspective, I'd still like to keep a tab on that one just to see where we are.
Yeah, on that same note, a lot of residents think that whatever their tax bill is, it does come to this establishment, but as Deputy Mayor Densham mentions, it does get where the percentage goes to the counties, the school board, and we keep our portion. So I'll look on this side. Any questions? I think that it was very well presented. I'd like to say we're always going to have debentures on stuff. We're always got to keep moving. But I think overall, I still feel that moving forward, whatever council, the next term of council comes in, it's something where we do have the benefit of some financials from GFL. I still look and see where I want to operate with our operational and other funds coming into capital, and that's the balance I think that we need to look at. Development is growing, which is a nice thing to see. I referred back to the water tower in Chrysler. I was taken back when the quote for an RFP just to refurbish our water tower was close to $1 million, or was at $1 million. It came a bit under, but it was at $1 million. And when you look at the people that have to pay for that, is not on the tax levy, it's on the system itself of the people that are on that. So if you have a town of 500 household or 5,000 household, there's still that one water tower that can be shared. So it's something to say from small municipalities to look forward. So the growth is just going to build and help us out moving forward in the future. So seeing no other questions, Kim, did you want to add anything to?
Through you, Mr. Mayor. Actually, no, I really like the presentation. I know finance is exciting to finance people, but that's about it. So it was well done. Really happy to be meeting deadlines this year, and that's great for me. So thank you very much.
And the benefit as well, and people might not know, with a third-party audit, it's where you come in. It's not an internal audit, so it's nice and transparent to have where you come in and give us the report that you presented. So again, thank you very much. It was very much appreciated. So, and like I said earlier, you're welcome to stick around, or if you have other engagement, we will move on to with our agenda. So moving on to item 7.1, the adoption of minutes of our previous meeting. Mr. Clerk.
Moved by Councillor McDonald, seconded by Deputy Mayor Densham. Be it resolved that the following minutes be approved as presented. Regular meeting, 28th of April, 2026 minutes. Regular meeting, 12th of May, 2026 minutes.
Thank you. Any questions or comments? Seeing none, all in favor? Motion is carried. There was no minutes from our committees or local boards, so we'll move to receiving our monthly staff report and recommendations for revisions of tax collection policy.
Moved by Deputy Mayor Densham, seconded by Councillor McDonald, that the Council of the Township of North Stormont receives report FIN-11-2026 and approves the revised tax collection policy number FIN-001-2026 to be formally approved by bylaw.
Thank you. So before I go for questions, I'll just let Kim brief us a little deeper in the conversation.
Through you, Mr. Mayor. Policy is being revised only because there was attachments to it. So there was this, like Appendix 1, Appendix 2. We wanted to change some of the wording and some of the format in the pre-authorized payment form, but because it formed part of the tax bylaw, tax collection bylaw, we had to bring it back. So while we did that, we thought we might as well take a look at the whole policy and see if there's anything else that needs to be fixed up a little bit. And so the changes noticed in the analysis were those changes made. It was made to say the applicable pre-authorized payment form. There was references to MPAC for reconsideration, that we had it as an appendix, whereas now it says, please refer to their website or the most current form. So we're not constantly bringing this back to council over minor housekeeping changes. So those are the big issues that basically why it's being brought forward, and we just fixed up a few little things in the meantime.
Perfect. Looking at questions from council. I think it's self-explanatory, so seeing that, all in favor, motion is carried. Moving to item 9.2 in regards to lighting retrofit program.
Moved by Councillor McDonald, seconded by Deputy Mayor Densham, that the Council of the Township of North Stormont accepts report REC-04-2026 from the Director of Parks, Recreation and Facilities and approves the installation of new LED lighting at Avonmore NSP, including the library and doctor's office, Moose Creek Pool Building, Finch Arena, Lobby, Hall and Library, and Chrysler Hall, Library, Dome, and Tebow Place at a total cost of $43,198.44, including a $5,000 contingency funded from the Deferred Revenue Community Benefit Fund, GL 1-2-9956-000, that the work be completed by awarding the installation contract to JD Electric in the amount of $15,870 and the supply of lighting fixtures to Futech Supplies in the amount of $22,328.44.
Thank you. So before I go to questions, I'll see if our rec director can shed some light on the report. I have to say.
That was a good one. Yeah. Through the chair, yes, we, last year we did a little bit of analysis on our use of hydro within our recreation facilities, including baseball diamonds and our recreation halls. Our annual cost for hydro right now is sitting at $53,000. You know, it's a portion of the hall, some of the fridges are on, it's not all electrical. So doing this, I did analysis, what would be saving as a percentage of changing from your regular fluorescent lights to LED, and to be on the low end of this, even though they say LED lights could be up to 70% saving, well, it'd be easy to calculate if we just calculate the lights in here and not what's all connected to the electrical system. So on the lower point, it'd be like 16% minimum saving, which would represent about $5,200 on annual income of our expenses for the hydro. So if you know, most of these, all that we mentioned, got the lighting system dates back, some of them as much as 30 years old. So start changing this and retrofit and the couplings of changing to relamping, there'll be additional costs, even though the saving shows it's cheaper just to change the bulbs, but there's additional costs of the lens and the coupling and the ballast that eventually you have to start changing. These new lights has no ballast, so it'll be all new lens. The only thing, that's why the contingency of 5,000 is as much as I did possible to go to every building at every corner, everything. I'm afraid that we missed a few lights. And the other thing is we noticed that in Chrysler, Avonmore, we checked a few in Finch. There's no safety chains attached to any of our lighting system. It's against our building code, right? If something would happen, the ceiling would fall, these lights are not held up by any chain. So that's why I added that little bit of extra, because some of these lights has them, some of them don't. So when they open the ceilings, they'll have to make sure that everything is tied up for safety reasons. So we compared both, and to me, our saving, it's like it mentioned in the report, if you go the difference in percentage, relamping give us 0.06% of the saving, but right now, until May 31st, we can qualify for a grant up to 40% of new lights. So an example, a new light could cost us only $40 compared to spending $30 for 2 bulbs. And then we have no more ballast to change, new lens and new lights that's going to last another 25 years. So we're at the stage that we're looking ways to save on our annual budget, and I think this is a perfect opportunity to use some of these reserve funds to actually help out our tax rate and lower our utility bills.
Okay, I'll look for questions. I'll start with Councillor Shane.
Just one question, actually, you touched on there was the financial rebate initiative, 46%. Is that going to come off the price now, or this price of 43,000 is with the 46%?
Through the chair, it's already off. So a 46%, the regular price for our lights was $41,603.64. We have a rebate of $19,275.20, which gives us 46%. That's why the cost of the lights now is $22,328.44. We got 5 days to. It's last minute. By the time we found out that we're qualified for this this grant and get the estimates in and get the electrician in to come around all our buildings, it's time crunching.
Councillor Bajelli.
No, I just, I appreciate the breakdown on the table. You can actually see with the all-in costs. And I'm sure that some of the recs will be very happy with this too, because one of the concerns we were hearing is what it's cost. Some, as far as their hydro bills comparatively to others. So it's kind of puts everybody for the most part, on the level playing field.
Go ahead, Deputy Mayor Densham.
Thank you, Mr. Mayor. Yeah, and I think it's the direction we need to go. I think it makes sense to replace with LED rather than keep circulating through bulbs over time. I guess the only issue I have is it's not in budget. Again, this, and I think we're at a bit of a time crunch because you have a rebate window that's closing. Is that right? And that's
May
why
31st.
we're pulling it in now. Because I think an expense like this, again, I'm not sure. You mentioned the reserve that you want to pull from, but what I'm not clear on is how that reserve gets populated with money and whether or not we've already had some discussions, and this is why I feel a little bit out because we're not in a budget time of what other things might we have been earmarking or eyeballing that money for, because we do know that we have a lot of rec building work to be done into the future, and we need to prioritize. So I don't know if our treasurer can comment, or you can too, as Pierre. Sorry.
Through you, Mr. Mayor. This is the Community Benefit Fund that right now what happens is it's roughly $30,000 and we divide it up between the rec groups and they get it. Prior to them having that every year, it got missed. So it got put into this deferred revenue account and has not been used. So this is a great opportunity to use it for its purpose.
And how much is in there?
$92,685.75.
Okay. Again, I think we need to take advantage of an opportunity of rebates when they come to us. So I'm happy to support. But like I say, it just feels a little bit wonky having a budget type discussion off budget cycle. But that's fine. I'll support. Thank you.
Any further questions? So I think, Pierre, did you want to, sorry?
Yeah,
did you
just
wanna
through the
answer?
chair, as we did mention, we're always saying, well, baseball lights cost a lot of money. They do, only when they're on, but they're only on for a short period of time during the whole year. So I got somebody to make me an estimate of what it would cost us to change the lights of the baseball diamonds. And just the baseball diamonds alone would be $145,000. So our hydro use for baseball diamonds, all the baseball diamonds right now is $3,400 a year. So the payback would be 42 years on our baseball lights to change them to LED. So even though we all say they use a lot of hydro, yes, when you turn them on, but once they're on, they're mercury lead, so they're heated, it's fine. But just to say it takes 42 years to get our money back for baseball lights. Unless we find
Fees are going up.
unless we find 100% funding, it'd be worth changing to reduce this cost of $3,600. But as you can see, this wouldn't be the big saving for us right now. Our big saving would be our halls that are used 12 months a year compared to a baseball diamond that they're saying would take 42 years.
Is there such a thing, a glow-in-the-dark balls? No. I'm really, no, so, Pierre, as Steve mentioned, getting off, I understand, but then funding, this is how I always like to see. If there's funding that can alleviate from digging in our taxpayers' pockets for everything that we do, so if we can get that. Now, with yourself in the position now, so I've had back in the day, the arena was changed. It's hard. What I'd like to see is just numbers that comes out on the sheet. Oh, we can save over, the turnover would be 5 years or whatever. I would just like to follow through and just get true numbers and be able to, for future reference, so that we're able to say, you know what, yeah, we did do a good move, and now we're saving. But it's always on paper. It's easy to put some stuff. But if we can follow up over the year, over next year, over 2 years, and just kind of see and say, yeah, you know what, this was a good move. It's good to track and to just keep in your back pocket for other ventures that come up that we feel that, okay, we did the right thing. So that's something just following up, and as we move forward, it appears, I'll put it to a vote, but it appears that there's interest. So if we can follow up and just get that. So
Through the chair, that is my plan, is after 1 full year, we'll be able to see how much kilowatt we save per hour or per use, per facility, and then be able to present to council what was our actual saving for 1 full year. There's other ways we can save, and eventually, I think if we move in this direction, as far as HVAC or heating and cooling overhauls, it can be all programmed, so this way when there's nobody on our halls, the halls are not sitting at 68 or 70 degrees, and so these are all saving tips. I'll be looking to see where we can reduce our costs of our facilities.
Hey, yeah. And also, we don't forget that we are changing going to LED. So we're progressing in moving forward, and it's not just it's the money, but also I think we need to look forward and move in that right direction. So, I know exactly. Okay, so with that said, seeing no further questions, all in favor? Motion is carried. So moving on to our bylaw, so bylaw number 33-2026 in regards to policy on our property tax collection bylaw.
Moved by Councillor Shane, seconded by Councillor Bujelli. Be it resolved that bylaw number 33-2026, being a bylaw to repeal and replace bylaw number 38-2024, to adopt a property tax collection policy for the Township of North Stormont, be passed this 26th day of May, 2026.
Any additional questions or comments? Seeing none, all in favor? Motion's carried. Looking at our correspondence from item 11.1 to 11.11, Mr. Clerk.
Moved by Councillor Bujelli, seconded by Councillor Shane. Be it resolved that the correspondence as listed as items 11.2 to 11.11 on the agenda be received.
Thank you. Any questions in regards to correspondence? In favor of accepting the report? Motion is carried. No motion. Moving to our next scheduled meeting, which will take place June 5th, where we have a committee of adjustment at 8:30 in the morning, and then June 9th will be our regular council meeting at 6 p.m. Regarding coming events, again, I think our website, social media is well for anybody to take a peek. And before I go to ratification, I see Mr. CEO wanted to add something.
I just wanted to add June 3rd, we'll have a committee of the whole meeting starting at 4 o'clock. That was omitted from the agenda, and I apologize for that.
Perfect.
Wednesday, June 3rd, 4 p.m.
At 4 p.m.
Yep.
Perfect. Thank you. With that, now moving to ratification.
Moved by Councillor Shane, seconded by Councillor Bujelli. Be it resolved that bylaw number 34-2026, being a bylaw to adopt, confirm, and ratify council's actions at its regular meeting of council, be read and passed in open council this 26th day of May, 2026.
Thank you. All in favor? Motion is carried. And moving to adjournment, please.
Moved by Councillor Bujelli, seconded by Councillor Shane. Be it resolved that this regular meeting adjourn at 6:40 p.m.
Thank you. All in favor? And motion is carried. Well, that was one for the books. I appreciate everyone that attended. Anybody online, have yourself a great evening.